We have about 20 minutes left before the pre-opening rates kick in. For now, it looks like we're going to start with some consolidation after the gains under our belt. But Ashish Chaturmota of Sanctum Wealth Management is here with us to give us a list of stocks that you can trade this morning. Ashish, hi, good morning. What would be the stocks on your radar today?
So I think, yesterday we have seen a massive, build-up of positions into a lot of these NBFC names. And within this, I think a lot of these beaten down names are showing very good traction. Now, if you look at L&T Financial Holdings, this is one stock which has formed a very strong double bottom at around 120 odd levels. And from 120 to almost 140, we have seen considerable amount of, open interest addition on the long side. So I think this trend is going to continue. I think this stock has a potential to at least see 5 to 7% kind of uptick from current levels. In an immediate short term, 136 would be my trading stop loss for going long into L&T Financial Holdings. On upside, 152 could be a shorter term target one can expect into it. Apart from that, I think even if you look at a lot of these housing finance companies like Canfin Homes has seen a considerable amount of open interest. So that will also be in focus for good 5 to 6% kind of uptick from current levels. We are seeing selectively a lot of buying interest into this mid-cap private sector banks, where we have seen a good amount of dip in last 4 or 5 months, and within that DCB Bank is one stock which is looking very, very promising. If you look at last 7-8 months, it was into a consolidation phase, and now it has given a very strong breakout above 190 odd levels. And with this breakout, we have seen open interest addition of almost 15 to 18% clearly on the long side. If you look at in terms of rollovers also, the Mass series has come out with a very positive rollovers into mid-cap private sector banks like DCB Bank, or even for that matter Federal Bank. So I think this space is going to be very promising. DCB could be initiated as a buy with a stop below 190, and in a short to medium term, I'm expecting stock to hit 215, 220 kind of zone. And my last bet would be SRF. So if you look at SRF, we have recommended last week as well, and I think this stock has given a very strong breakout on a pole and flag formation. If you look at in terms of open interest addition, last 4 days, almost 9 to 10% open interest has already been added into the stock, and stock is continuously hovering around 52-week high zone. So that indicates that there is a clear buying interest being visible into SRF. So this could be a buy idea. 23.30 would be my trading stop loss. On upside, I'm expecting stock to cross its all-time high and can target somewhere around 24.80 zone.
Okay. Right. Ashish, just before you came, Anuj was telling us that, the VIX has dropped to its 200-day moving average, and the put-call ratio is also very close to 1:1.8. So, are you getting a sense that the market is overbought from an F&O perspective?
See, Lata, one interesting data which is there is that as an index level, yes, it's overbought. But if you look at this trend is basically into non-Nifty, next junior 50 kind of stocks. So I think that trend is going to be very, very strong. Yes, at an index level, you might see some, resistance coming around 11,080, 11,100 kind of zone. And it looks little tricky, because if you look at except Reliance, you are really not seeing a lot of contribution coming from HDFC Twins. So that could be one reason index might remain sideways, but definitely this second rung stocks can see a strong uptrend from current levels.
Okay, Ashish, we leave it at that. Thanks so much for joining us. So those are some F&O trades coming in before the pre-opening rates kick in, and we have, of course, some more fundamental guests joining in. Before that, let's hear it out from Manishi Ray Chaudhary of BNP Paribas. We spoke with him earlier on. He expects volatility in India to continue in the coming months because of the geopolitical scenario and the upcoming elections. On the trade front, though, he remains optimistic about US and China to reach a trade agreement by the second half of this year. Listen in.
We're currently neutral on India. We downgraded it from an overweight in the second half of last year, and we're holding on to that stance because in India, while it remains the fastest growing large economy in the world, such growth is not translating into corporate earnings. If you look at the consensus EPS in India, it's been declining over past 1.5 to 2 years, over last 2 to 3 months as well. It has declined. But since we have a reasonably large canvas to choose from in India, and stock selection is relatively easier, we have maintained this neutralish stance. And I think over the next couple of months, owing to the geopolitical reasons and the domestic political reasons, the upcoming elections, volatility in India would be relatively higher than in the rest of Asia. I think the US leadership is also aware of the fact that there's an election, there's an election cycle in 2020. And there's a need for the equity markets or other financial asset markets to revive prior to that. So I think there are all these considerations that are influencing the decision making both in US and China, particularly in the US, I would say. So I think possibly in the second half of this year we could look forward to some kind of a deal being arrived at. We don't know the shape and size of that, but in the meantime, I think the market has given this whole thing a benefit of doubt, and that I think it may be a bit too premature looking at the way the market has moved.
Okay, let's move on. CLSA has released an interesting report on Indian IT. They have an optimistic view. Reema Tendulkar joins us with more details. Reema?
Hi Anuj, good morning. Well, they come up with a tectonic report, which is a monthly view of all things tech and internet in India, where they talk about the IT demand dipstick. They say that Indian IT hiring has grown for the 10th successive month, and it's higher by 36% on a year-on-year basis in the month of January. The global environment looks fairly benign, especially US economy, with unemployment rates stable at 3.6% and the initial jobless claims in US declining. So the US CEO confidence has gone up, but on the other hand, the sentiment, also if you look at the way the currency has performed in the last month, rupee was down versus the overall average forex basket. Now, when it comes to the overall IT performance, they say that the IT has outperformed the Nifty in the last month. It's also outperformed on a 12-month basis. The conversation with companies at the NASSCOM annual conference last month suggests an unexpectedly strong demand environment. When they talk about the valuations, they say among the tier 1 companies, TCS are now trading above the midpoint PE average, but over gradual demand improvement for leading firms, and HCL Tech and Infosys, according to them, offers the most value, while TCS offers momentum. Back to you.
Okay, thank you very much. That's a positive report. We've been crying about unemployment, and we will analyze the CMI report later on in the morning. But this is huge hiring that the IT companies have done. Okay, Reema, you told us that HCL Tech and Infosys is the pick for CLSA. Then here's a mega CNBC-TV exclusive exactly on one of those stocks. Shireen Bhan caught up with Salil Parekh, the CEO of Infosys. This is his first ever television interview, I think first ever media interview since taking over at the helm on Infosys. Listen to what he had to say, his guidance on margins, but more importantly, his view on the digital business.
We are very clear. We are targeting a high margin business. We are never going to sacrifice margins for growth or for anything. For fiscal 19, we have a guidance 22 to 24. We'll fall well within the guidance. So we are very comfortable. That's what we indicated at the end of the last quarter. Stepping back a bit and looking at the market, if you look at this digital area that I was describing, one that's growing 30% for us, we shared some data a while ago. The addressable market for that is about 160 billion. That whole market is growing at around 15%. So that market today has shown no sign of slowing. Today we are looking at small and mid-size. We've not looked at anything else, but we have a very strong balance sheet. So nothing precludes us from doing something, not that we're doing something massive, but we can certainly do mid-size. Our balance sheet allows us to do something even larger. At this stage, we're not doing any of that. Our focus is primarily on small and mid-size.
All right, that is the IT space. But moving on to media now, one stock that has rallied almost 50% from the lows in January is Z Entertainment. And some interesting brokerage notes coming in. Mangalam is here to tell us more about that. Hi, Mangalam.
Hi, absolutely. So after that 50% rally from the lows, CLSA says that let's look at Z beyond the strategic stake sale that comes in. They have a buy rating on the stock with a target price of 670. Why do they say that? Because, well, they believe that management change is unlikely post this strategic sale comes in. And the fact that the stock has rallied about 50% from lows of around 318, the probability of, lenders invoking pledge reduces further. And as this happens, promoters also sell lower stake at a higher valuation given the sort of rally that we've seen in the stock. They believe the blue sky scenario for minority stakeholders would be if this strategic stake sale is done at a premium, and secondly, the management stays the same Thirdly, most importantly, this deal is done at an arm's length with the new partner being just a business partner. Fourthly, they believe that this premium would may not see the management stake sale change. And currently, despite the rally, the stock at 24 times is trading at a discount, a 15% discount to the 10-year average valuation. So look beyond the stake sale, and the recent rally reduces the risk of pledge. And CLSA believes this is a time to buy Z with a target of 670.
Okay.
670. All right, we look forward to that. That's quite a distance even from current levels. Thank you very much, Mangalam, for putting that on the table. But let's see when the deal gets done. Everyone knows it's a distressed seller, so we'll have to really wait and see. We take a break on that note. We are coming back. We should be having the pre-opening rates, and we will also have our guest, Devin Choksi of KR Choksi.